Hey guys, welcome back. In this particular video, we are going to talk about foreign trade. So, foreign trade or international trade. So, we will go through the major import and export destination of India, as well as major imported and exported commodities. Okay, and we will study the key importance of balance of payment and balance of trade and the differences between FDI and FIIs and import export data as well. So again, this particular topic is very important for your examination purpose. And if you see, the concepts which is quite important, and even like if you study newspaper on daily basis, so you'll find some data related to foreign trade as well. Okay, so here in this video, throughout the video, we are going to discuss so many things. So please do watch the video till the end, and please do like the video. And if you are new to my channel, please do subscribe. So guys, whenever we talk about foreign trade, I hope you guys know what is foreign trade. And like whenever you talk about the foreign trade, basically it is an exchange of capital, goods and services. Okay, so capital means the investment, long-term investment. Okay, investment made by foreigners in Indian economy or Indians by in some foreign countries. Then we have goods. Okay, so exchange of goods or import and exports of goods, we can say, and services like IT services, banking services, so which is provided by Indians in foreign countries and foreigners by Indian countries, by foreigners in Indian country. Okay, so it is basically, we can say, the entire the relation between the two countries or India or rest to the world. Okay, so international trade is the exchange of capital, goods and services across international borders or territories, because there is a need and wants. Okay, so like we have few resources in excess, so we export them, or even we have scarcity of few resources, so we import them. Okay, so in every country nowadays we are living in a era of globalization, so we have dependency on other countries, or some other countries they have dependency on our country. Okay, so this relation or this exchange of capital, goods and services is basically known as foreign trade. If you talk about Indian economy, so I hope you remember the economic reforms or the LPG policy. So we start in 1990s. Basically, government of India, they came with this new economic reforms, which was based on LPG model, which is liberalization, privatization and globalization. So here we generally open up our economy, and we start liberalizing our rules towards the business. We government start giving license to private entities, and we start exploring other countries for import and export as well. So if you talk about the Indian economy, the journey of foreign trade, or the major kick to foreign trade, that we generally got in 1990 after this economic reforms, or it generally comes in each and every industry, every small industry to large industry, like coal, like we can say automobiles or cinema or everywhere. Okay, banking and all. So after this we generally start making relation with other countries as well. Okay, so now if you talk about the import and export by India. Okay, so nowadays India, like we are fifth largest economy in the world, and we have a fair relation with other countries. Okay, so like we import so many things from other countries and we export them as well. Okay, so the countries with which India is engaged in export and import activities are called trading partner. Now this term is very important. So many times, like if you see the data, trading partners. Okay, so trading partners, trading means buying and selling. So here it means, in case of foreign trade, it means import and exports of goods and services. Okay, so if you see the data, so in USA, China, UAE, so these are one of the largest trading partner with India. Okay, so if you sum the overall import and export with these particular countries, right? So we will study the import or the major imported items or the countries as well. So I have some newspaper cutting as well. So export by India. So these are some major export which is done by India. So a petroleum product, if you see, Netherlands that generally become like in last few years, Netherlands or this country become that came in limelight. Even in import, Bangladesh came in limelight. So there was a data about Netherlands, but we'll talk about the topmost. Like we have USA, and we have UAE, we have China, Bangladesh, Netherlands, and Singapore, Hong Kong, UK, Belgium, Germany. So these are the top 10 destinations for India where we generally export things. Okay, so where we generally sell our products or our goods and services. And the overall data, if you see, so like US on top, then UAE, then China, Bangladesh, and Hong Kong. Even apart from Netherlands, we have Bangladesh as well, as per another report in financial year 22. So Bangladesh, where we generally sell cotton, carols or electricity, fuel, and all these particular things. If you talk about the overall imports of India, so here we have the China is one of the largest destination for import. Okay, from generally Indians buyers, they generally import maximum things. About 44% of India's import that generally happen from China. Even in our market as well, if you see the product, small products, so you'll find made in China in a bulk quantity. Okay, so apart from China, we have US. Okay, then we have UAE, and then we have Saudi Arab, and all these particular countries from we generally make our import. But if you see about if you talk about the export, so our major export destination is USA and the other countries as well. So and if you talk about the major imports, so we generally do maximum import from China, followed by USA, UAE, and other countries. And now there is a hack. If you see the overall import export data, so these are the countries from where we import and from those we export. Okay, so like whenever we define our foreign trade policies, so we make these kind of bilateral agreements. If you are importing these things from your country, so you have to import these things from our country. So that is generally part of your foreign trade policy as well. Okay, so top 10 import, if you see what we import in bulk, so that is crude oil on top, so mineral fuel, which is crude oil maximum about 25%, gems and precious metal around 13%, electronic machinery 10%, we have nuclear reactors and boilers, it is about 9%, then organic chemicals, plastics, and all. So these are the major export commodities, major import commodities for India. Okay, so these are the items which we generally import from different countries. Okay, now next thing, after this Russia Ukraine war, there is a change in crude oil imports. Okay, so previously we import maximum from Iraq, Saudi Arabia, UAE, USA, but recently or after this during this Russia Ukraine war, so India's crude oil import from Russia that increased drastically, basic because like Russia, they generally offer us crude oil at a lower price. Okay, so here you can see nowadays the maximum crude oil or this petroleum products we are generally importing from Russia, and then followed by Iraq, Saudi Arab, UAE, and USA. Okay, so basically they give us discount, and like we India and Russia, they are friends from so long. Okay, so during this situation, India, they generally back Russia in United Nations General Assembly, and also for this particular friendship, we also got some benefit. So this is the benefit. Okay, so these are some import export data which is quite important, or quite important for your understanding toward the foreign trade. Okay, and foreign trade is basically it is an exchange of capital, goods, and services across the borders. Okay, now there is a term which is known as balance of payment. I hope you guys heard about this so many times. So what is balance of payment? It is a monetary transaction between two countries or India and rest of the world. Okay, let's say this is India and they did number of monetary transactions with the rest of the world. So this account is generally known as balance of payment. Or for this we have different head as well, like we have current account, we have capital account, we have financial account. Current account which deals with goods and services, and capital and financial which deal with investments. Okay, so balance of payment is a statement which record all the monetary transaction made between resident of a country and the rest of the world during a financial year or during a given time duration. Okay, so during a period, what monetary transaction Indians, what we imported from other countries or what other countries imported from us. Okay, so this transactions like the overall remittances or anything, import, export, remittances, everything is generally part of this particular statement which is called balance of payment. So this statement include all the transaction made by individual, corporate, government, and help in monitoring the flow of funds in the economy. So, like let's say if you remitted some money from US, so that will be part of this particular seed. Okay, even let's say if you exported few commodities to Nepal or Bangladesh or some other country, so that will be part of this particular. So all the monetary transaction, they are generally part of your balance of payment. Now the question is why BOP is important. So we have so many reasons for this particular statement, like balance of payment of a country reveal its financial and economic status. Like if you have a surplus balance of payment, which means you are doing more export, so your credit value is higher than your debit value. So which give you a strength. That particular economy is self-centric. Okay, that is self-dependent. Okay, so they have a strong they have a strong that economy have a strong we can say strength in the world. Okay, so BOP statement can be used as an indicator to determine whether the country's currency value is appreciating or depreciating. So if you will do more import, which means your currency will go out, so the value of that currency is decreasing. Okay, so and if you do more export, if you will increase your export day by day, so which means you will earn money from other countries, so your account will be credited, which means that there is a demand for your domestic currency. So this will give a strength to your domestic currency. Okay, BOP statement help the government to decide fiscal and trade policies. So when government decide their fiscal policy or the international trade policy, so they also see the countries from where we generally importing things. Whenever government they do the bilateral trade, so they generally see the current balance of payment status or current balance of trade status. So how we are doing. So even when we make a deal, so we give a like we present this data. If we are importing these things from your country, so you have to import these things from our country as well. Okay, so it provides important information to analyze and understand the economic dealing of a country with another one. So as I earlier told you about this thing, so like whenever government of India, they generally decide their foreign trade policy, or they come under any memorandum of agreements. Okay, MOA, whenever they sign any MOA or any bilateral trade with any country, so they generally decide their policies as per the current BOP or BOT status. Okay, so hope you get these particular thing clearly. Now next one. So if you see this document, it's a basically statement balance of payment. So balance of payment, that is further categorized in among three part. Okay, so one is current account that generally deals with goods and services. So goods and services, the import and exports of goods and services during a financial year or during a given time duration, which generally falls under current account. Capital and financial account, they generally deal with long term and short term financing. Okay, so investment made by foreigners for short term, for long term. So they generally comes under your capital and financial account. Okay, so first we have current account. The current account monitor the flow of funds from goods and services, import export between countries. So during a financial year, whatever import is done by Indians or whatever export is done by Indians, so that generally comes under your current account. Capital accounts, the capital account monitor the flow of international capital transactions. Okay, investment made by Indians in foreign countries or foreigners by Indian country. So these particular monetary transactions, they generally comes under your capital account. Capital account also include money received from debt forgiveness, which means grants. So let's say IMF, they gave 100 million US dollar grants to any Indian state. So that will generally comes under your capital account. Gift taxes. So if there is any gift taxes, so that will be part of this particular account only. Okay. So balance of payment is nothing. It is we can say it is it is a statement about the all monetary transaction happen during a financial year or during a specific period. Okay. Now there is a term FDI and FIIs. I hope you guys heard about this particular term so many times. Every day when you read newspaper, so there are news about foreign direct investment. There are news about foreign institutional investment. So what is the key differences between these two? We will understand in this video only. Okay. So foreign direct investment, one is FDI, foreign direct investment, and another one is a foreign institutional investment. So as the name state, direct investment, it is a direct investment in Indian economy or in any economy in the productive capacities. Productive capacities means land, labor, capital, entrepreneurship, and all these things. Okay, let's say there is a XYZ, there is a US citizen, there is a US person or a businessman who invested in India. He started some XYZ business in India. He started some XYZ business in India. He opened one bank in India. He opened one car making company in India. So recently, I hope you heard about the Tesla. So they came to India and they make a setup in Bangalore. So that is a direct investment. So I hope you heard about the IKEA, one of the largest furniture brand in the world. So they came India. They started they opened their outlet in different parts of India. Like recently they opened in Bangalore, okay, or in Hyderabad, in Mumbai. So when this foreigner, so these terms are generally, first thing you need to understand, both the terms are related to foreigners. Okay, so if this foreigner is coming in India and he is investing in productive capacities, means he is investing, he is having the direct ownership, he is coming to India, he is investing in land, he is buying machinery, he is basically making a new setup in our country. So that is part of your direct investment. He have the direct ownership, the decision making, the price determination, that generally belongs to foreigner in this particular case. Okay, indirect investment, foreign institutional. So this is known as indirect investment. Why it is called indirect? Because here foreigner, he is making investment in Indian shares, already listed companies. Okay, so let's say we have TCS Limited is listed on a stock exchange. If any foreigner who buy the shares of TCS, he buy the shares of TCS. So this investment, he is like, if you buy the share of any company, you become the owner of that particular company. Owner means if this company will do, let's say if this company is performing well, so the prices of shares will also goes up and vice versa. Okay, so if this foreigner who generally invested through shares in the market, through mutual fund, through bonds, he invested, he have some ownership, but the ownership type is indirect ownership, because he do not have the decision making right or the price determination about TCS. This is done by TCS board only. But if after the decision they got some profit, so the prices of shares will goes up. Okay, so that's why it is generally known as indirect ownership. They are investing their money only, their capital only. But in case of direct investment, they are investing their capital, their technology, their management, and other things as well. Okay, so this is the investment time. Now, like, this is for long term. if you see the FDI investment. So if he is coming to India, he is making that much of setup. So he have a long term vision. Like IKEA, when they enter in India, they give plan for 10 year, 25 year. Okay, so which means they are making that much of setup. So they'll last for the longer period. Okay, but here in case of FIIs, this is a short term investment. Why? So in case of FIIs or share market, they generally do churning. Churning means they invested in TCS. After 10 days, they got some profit and they sell the shares. They invested in Reliance. After some time, they invested in SBI. So here, this investment is kind of short term investment. If there will be some problem with Indian economy, they'll sell their shares and they'll invest in some other countries. But in this particular case, we have a long term vision. Okay, apart from this, like in case of FDI, along with capital, they invest the management, their management style, their technologies, so they are generally part of this one. But in case of FIIs, it is investment only. Okay, so I hope guys, you got an idea about or the basic difference between the foreign direct investment and foreign institutional investment. Now we'll deep dive these particular concepts. So first one is foreign direct investment. As I told you, this is generally known as direct investment. Why it is called direct investment? Because the owner or the investor, they have direct involvement in that particular business. Okay, so they have decision making right. They generally do price determination about the product. So if any, like if Elon Musk, he started his car making company in India, let's say. Okay, so he'll have the direct ownership, how to make cars, what will be the technology, how management will work, or how much amount he is going to invest, what will be the pricing. So these all things will be decided by Elon Musk. Okay, but even like I gave you example of IKEA and other companies as well. So in case of foreign direct investment, they do have that involvement. So foreign direct investment is an investment made by a firm or individual in one country into business interest located in another country. As I gave you example of Elon, so he invested in Indian market. He in car manufacturing segment, he acquire a land, lease a land. He set up some machinery. He hired people. He he basically use his management skill. Then they manufacture car, and he only or his board only will decide the prices of his car. Okay, so that is foreign direct investment. So if you talk about the foreign direct investment routes in India, so we have two major route. One is automatic route and another one is government route. So in case of automatic routes, so the bill is already passed in our parliament. So the bill was already passed in our parliament. Okay, so let's say in case of single brand retail, we have 100% FDI limit, which means if any foreigner who want to start retail house, he want to start a single brand retail. Let's say if any foreigner who want to start a Nike business in India, so he can own that particular business solely by 100%, and he do not need any approval from government of India. Okay, because that bill was already passed in our parliament. But in case of government route, so let's say in case of private sector bank, we have FDI limit of 74%. Okay, so in private sector bank we have FDI limit of 74%. If any foreigner who want to start banking business in India, so prior this, for this particular setup, he need an approval from government of India for this kind of ownership or this kind of setup. So by this route, FDI is allowed without prior approval of government of India or Reserve Bank of India. But in this one, in case of government route, so there are some restrictions or there are some basic approvals which are generally need from government of India. So these are some areas where basically we need or government, they need concern, they have some concern. So for that one we have government route. Okay, FDI limit in India. Now what is limit? So in every business we have different type of limit. Like as I told you, so in case of public sector bank, the maximum FDI ceiling is 20%. In case of multiple brands or this shopping malls and all, we have 51%. In case of private bank, we have 74%. In case of payment bank, we have 74%. In case of asset reconstruction companies, we have 100%. In case of debt recovery companies, we have 100%. In case of white label ATMs, we have 100%. So government of India, they decided areas as per the concerned business. So they set some limit. In this particular limit, foreigner, they can own that particular business by maximum this percentage. So that is generally known as FDI limit. So one suggestion is, like, if you are preparing for any government examination, let's say if you are preparing for bank examination, so you need updated about the like public sector bank, private payment, ARC and all these things. Okay, if you are preparing for other examination like SSC, UPSC and all, so sometimes they ask question based on the recent changes or recent development. Okay, let's say government of India make some changes in FDI limit from 49 to 74%. So you need to aware about that particular thing. Okay, so this way you can prepare this area. Next one, FIIs. So what is FIIs? These are the international investors who generally invest on our stock exchanges. They invest in shares, they invest in mutual funds, bonds. So they are generally part of this one. So a foreign institutional investor is an investor or investment fund registered in a country outside one. So let's say if any US citizen who invest in Indian stock market, so that is part of your FIIs. Institutional investors most notably include hedge fund, insurance companies, pension funds. So they generally invest in these different areas. Okay. So now the basic differences between FDI and FIs. I hope this is clear now. Okay. So foreign direct investment and foreign institutional investors. So bring foreign capital, technology and management. So here only capital. Okay. So because he is making a new setup, here we have setup. He is only investing in stocks and all. Okay. Bring fund with along with term commitments, long term commitments. Okay, if he is going to start some business in India, so he have a long term vision. But here we do have churning. They buy one shares and then another, then next, then next. So that churning is more frequent in case of FIIs. Not easy to retrieve invested money. Okay, if we started some business, so it is very hard to liquidate that particular business, and it is a time taking process. But in case of share market, if he is investing in Indian stock market, so it is very easy. He can sell the shares, he can sell the bonds or mutual fund, and he can exit from Indian market. Okay, no risk of freight of capital, because he buys some machinery, so he can sell that particular machinery. If he buy let's say if any foreigner who is starting logistic company in India, he buy 10 trucks. So if he want to wind up that particular company, he can sell that particular truck. It will take time, but it is like there is a no we can say a flight of capital in that particular case. But in case this particular case, they are investing money in stock market, and stock market return are subject to market risk. I hope you heard about this particular line so many times. So here, like if we investing in shares and all, so there is a probability of default, or there is a probability of huge losses in this particular way as well. Okay, so guys, in this particular video we generally talk about the basics of foreign trade, how we do foreign, what is foreign trade, what are import exports and FDI FIs, balance of payments, trade and all. So I hope you get an idea about the foreign trade. In our next video, when we'll come, we'll talk about India's foreign trade policy and the elements of foreign trade policy, or whenever government they generally decide the foreign trade policy, so what are the key elements or key features under that particular one. Okay, and if you like the video, please do share with your friends, and if you are new to my channel, please do subscribe. So hope you enjoy the video. I'll see you soon with a new video. So take care, bye bye, all the best, thank you.